So Fannie Mae just came out with this new ruling that they're actually going to eliminate the 620 credit score. Why would Fannie Mae do this, and what's the benefit of it?
Well, I think it's pretty obvious that we're trying to reestablish homeownership and having buyers feel comfortable and give them an opportunity. This aligned with the proposal for the 50-year loan that's just come out. I think it's important to know and understand Fannie Mae dropping their score, what that means and how it could be an advantage for a potential home buyer and a current renter.
So here's the advantages of Fannie Mae dropping the 620 credit score. FHA has always been around 580. If you had a 580 to 620 score, you were stuck in the FHA world, meaning you couldn't get a Fannie Mae loan. If you had 620 and above, you qualified for a Fannie Mae loan, which means a little bit more savings on your interest in the program parameters of qualifying. By lowering this actually will benefit the buyer pool to buy homes using a conventional loan, not just the FHA 3.5%. So how does this benefit sellers? That means we're going to have more buyers able to buy homes, which will mean we're going to have probably more offers on homes. Home ownership is a good thing, and the government is always incentivizing home ownership because it actually benefits our country and the economy.
Right.
Every time a home is sold, so many industries are affected because that means the economy keeps growing. I believe the last GDP number that I saw was 17% came from home sales. So the government is always incentivized to keep houses sold because it keeps the economy stimulated.
But I get all of that, Ron. But what is like the average buyer? Okay, so you're renting and you have this dream of owning a home and you just want to check your credit score to see where you're at, or you're currently actively looking for a home, but you've been told that we've got to work on that score. What does an FHA to a Fannie Mae mean to the average home buyer? What does that mean for them? Explain that.
So a lot of it has to do with the type of quality of loan you get, which means you're going to get a little bit better interest rate. You're going to probably save a little bit more money on your mortgage insurance premium.
Yeah.
So having those things will save you thousands upon thousands of dollars over the life of the loan. Those are things that are all in your favor. So the reason why they're doing this is, once again, to open up the buyer pool and stimulate the economy.
Right.
It's good for everybody. Now remember, banks make money when they sell loans, so it's good for them also. We can go on and on about this, but what we really like to do is customize something specifically just for you. And what we want to do is show you all your options. And our job is to show you all the options, the good, the bad, and the ugly. And your job is to choose what's best for you. And the very first option I always talk about is you could do nothing. But at least you know exactly what the options are available for you and what direction you should go in. This is Ron and Eva Cedillo, powered by Place.
Sell your home and sleep.